stocks continue to grind higher. IT and auto are the key drivers, even as financials and consumer durables drag.
Bajaj Finance closed 1 crore new loans in the first quarter, its highest quarterly run rate ever. The feat comes on the back of its highest first quarter ever over quarter. In 8 years, deposits too see a strong show.
ITD cementation slumps after its foreign promoter says it is exploring divestment of its stake, but Kaya rallies on inking an exclusive sales and marketing deal with group company Marico.
Veteran investor Ramdev Agarwal says India should have a minister of capital markets to ensure we don't have any regulations that make equity investing unattractive in India's decade. He also calls for raising the taxable income limit to boost consumption.
And the party continues for the T20 Cricket World Champions as Team India lands in Delhi and will meet the Prime Minister shortly. They are also scheduled to hold an open bus parade in Mumbai later this evening.
You're watching us here on Halftime Report. It's a good-looking screen. The Nifty has hit yet another record high. In absence of the Nifty Bank today, the tug-of-war between the IT Index and the Nifty Bank continues. Today, IT Index takes a baton. I'm Mangalam Malu, with me Sonal Bhutra. Hi Sonal, the frontline indices muted. The broader markets is where all the action is.
There is a lot of action in the broader markets. You know, even though the advanced decline is, the gap is not so much, but still we are seeing those big moves come in some of these stocks. You spoke about Nifty IT definitely doing really well. But from the broader market, some of these names, Inox Wind, for instance, is up 14% on the back of that news update that they will be infusing some funds in the company, which will make it debt-free very soon. Greaves Cotton is making an up move, up 8% right now. Cochin Shipyard, it's crossed that 1 lakh crore market cap. That's Mazagon Dock, but Cochin Shipyard is the other company or a peer which is doing really well. That's up 7.5%. So across the board, we are seeing big gains come by. And some of them is without any fundamental backing for now. There's no news flow, but the uptick continues. And that is something we'll be discussing. And Inox Wind, something we'll be discussing in greater detail with the management today.
Absolutely. We'll take a lot of these stocks which will be on our radar this afternoon. Actually, as we speak, you know, First Source has moved higher. A lot of these mid-cap IT names are moving a little higher than the frontline end, which is actually picked up ahead of the result season. AB Fashion and Retail is another stock which I'm looking at, and Tata Chemicals from the broader markets has spiked to the high point of trade. These are the F&O stocks, but a lot of these cash stocks also seeing a lot of action. So we have NIIT Limited, which has moved with a gain of almost 8%. Shalimar Paints is the other one, which is up 9% this week, up 11%. Remember, over the weekend we got the news that the managing director of Shalimar Paints has tendered his resignation. So change of guard, change of management is something that the street is looking at in this counter. Lupin is the stock which is among the bigger gainers today after brokerage Kotak double upgraded the stock to add from sell. Sudarshan joins in with the rationale and details. Sudarshan.
Yes, so Lupin is one of the top mid-cap gainers. It's up almost 5% after Kotak Institutional Equities has double upgraded the stock to add from sell, and target is raised to 1805 from rupees 1400 per share. And this is on the back of its expectations of Lupin surprising positively in US sales in FY25-26. It expects 12% growth in US sales in FY25 and 11% in FY26. And the reasons for strong US sales growth are Spiriva and Albuterol will remain critical with a combined US sales contribution of $216 and $188 million in FY25 and 26 respectively. It does not expect any generic competition for company in Spiriva at least till H1 FY27. And two products that will be key to driving US sales are Mirvetrek and Tolvaptan. It believes potential upside for Tolvaptan is being underappreciated in estimates, and with $1.2 billion US sales reported by Otsuka as of CY23, Lupin's 180 days sole exclusivity from April 2025 from Tolvaptan in FY26 will be much above street's estimates. And even post the exclusivity, it expects Tolvaptan to remain a relatively low competitive product. Factoring all this, it has raised FY26-27 EPS estimates by 3 to 16% and see EBITDA margin expanding by 370 bips over FY24-26.
Okay, all right. Thank you so much, Sudarshan, for joining us with all those details. So Lupin is up by 5% on the back of that upgrade. Let's now focus on Bajaj Finance. They've clocked 1 crore new loans in Q1, its highest quarterly run rate ever. Abhishek Kothari is here with more details.
Well, the pre-quarter numbers that Bajaj Finance has given, it shows that it's a strong quarter for them with respect to business that they have clocked in Q1. They have given the highest new loans ever in a quarter, that is above the 1 crore level. So new loans are at about 1.1 crore, which is up 10.4% YOY and about 39.4% sequentially. So the sequential growth of 39.4% in Q1 or any Q1 is the highest in last 8 years that they have clocked. Cross-sell rate has improved to 7.38 versus 5.55% in the previous quarter. However, cross-sell rate has declined on a YOY basis. Last year in the same quarter, it was about 8.4%. Customer base growth has remained strong. It is now at 8.8 crore, which is up 20.7% YOY and about 5.3% sequentially. Now, they had given an estimate of loan growth being at 26 to 28% for FY25. However, this time around, the loan growth has been pretty healthy at 31% YOY and about 7% sequentially. Deposit momentum has remained healthy, growing at 25.5% YOY and about 4.3% sequentially. Liquidity in the balance sheet remains healthy. Overall liquidity in the balance sheet is about 16,200 crore, which is up 27.5% YOY and about 3.2% sequentially. And this liquidity forms about 4.6% of the overall AUM. Back to you.
Okay, Okay, all right. Thank you, Abhishek, for that. So that's Bajaj Finance. But the other stock on our radar is Kaya. It is buzzing in trade today after it signed a deal with Marico to market its products outside its store. Mangalam, tell us more about this.
Well, so Kaya and Marico usually are, they're the same group companies belonging to the Mariwalas itself. So they thought maybe why not, get the synergies of both of them to each other. And that's where the collaboration has come in. Marico has decided to market and sell some of Kaya's FMCG products or personal care products, 75 plus products outside of Kaya's clinics. So Kaya's wellness business also sells some of their consumer products in their 70 clinics, but Marico has now under this arrangement decided to sell it beyond that as well. Marico's reach is over 1 million stores on a direct basis. So this deal will unlock untapped growth potential of the Kaya brand. It is a bigger positive for Marico, for Kaya than Marico, because for Marico it will aid their premium personal care business. What we need to understand is what the commercial arrangements of this deal would be. Importantly, Kaya as a stock has seen a big rally, almost 70%, including today's gain over the last 1 month. So maybe the street was anticipating some sort of change in business strategy coming by, and this is something that has been announced. While Kaya is doing well, a lot of the other FMCG stocks also are actually spiking as we speak. So we have Honasa, which is Mamaearth, which is moved to the high point of trade with a gain of almost 7% Also, some of these paint names are doing better in today's trading session. So earlier in the day, Asian Paints was trading well in the green at the higher end of the range. And, now giving it company is Berger Paints as well. That too has moved higher. And Colgate as well was in the red at some point in today's trading session, has moved higher and currently at the higher end of today's trading range. So a lot of these consumer stocks anticipating good demand as we move into the monsoons. Yes, that's what's happening. And, that's been the general trend for a while now, that consumer names, they have been doing well. Look at that, Colgate, it's at the day's high. The Nifty is up around 47 points. But Bank Nifty, which was an outperformer yesterday, has come in for some profit booking. But I think that's par for the cause because it was a stellar rally, almost 1,000 point there. It is below that 53,000 mark now. But yesterday was the day for Bank Nifty. Yesterday was the day for Bank Nifty. Today so far is the day for IT, but this evening will definitely be the Team India evening, and that's because there would be an open bus parade here in Mumbai. I was lucky to be a part of one 17 years ago in 2007 when, Dhoni and his boys that time got the 2007 World Cup when they won it in South Africa. And now we have all of them being welcomed in Delhi. As you can see, footage. Very cool footage. Surya Kumar
I think even you feel like dancing with them.
Yeah, everyone feels like dancing with them. Obviously, the victory that they had made the country dance. We were waiting for one, parched for an ICC trophy for over 13 years and parched for a World Cup for, as much as well. So, a very important moment for the history of this nation, more so for these boys. Their entire career has been dedicated to this craft, and to reach the zenith, that too, before retiring, calling it a day, What an emotional moment. So all of this coming together.
And you know, that's you always say that's how sport combines the nation, that how it unifies the nation, and the celebration that night. And I'm sure it continues today as well. And you're going to be a part of that parade today.
Most definitely. There is no way I won't be a part of it. Traffic aside, everything aside, I'll probably walk to that place. But, you know, just to experience this moment is something that I wouldn't want to miss, especially because I've experienced it once. And these are core memories, right? Once you watch it, it remains with you through your lifetime.
It does for sure. And it's a great moment for the country. So we'll all be there to celebrate it. And of course, you'll tune into CNBC TV18 for all those updates. It's going to be a blast here and party on the channel as well. But on that note, we will have to take a short break. When we come back, we'll be joined by Arvind Nandan, MD Research and Consulting at Savills India, and Gaurav Karnik, Real Estate National Leader at EVA India, to discuss PE investments in real estate and the trends there. Stay tuned for that. Welcome back. You're still tuned into Halftime Report, and the Indian real estate market is on a roll, with private equity investments reaching a record $1.7 billion. This is in the first half of 2024. This is a 42% increase on a YY basis, as per a report by Savills. To discuss this and more, we have Arvind Nandan, the MD Research and Consulting, Savills India, and Gaurav Karnik, the Real Estate National Leader at EVA India. Gentlemen, thank you so much for joining us today, and we've been seeing great numbers come by in the real estate space. Arvind, let me come to you first up. What explains this trend that we are seeing in the real estate space, this big investment that's come by? Which segment are you seeing it mostly in right now?
That's very interesting. Actually, you know, there is a sort of recovery taking place in investments in real estate. We had seen a peak in 2019, then it dropped, you know, it became half in 2021, 22, recovered a little, and this year it's been going up. The main thing is that the interest has gotten a revival in the traditional core assets, office assets mainly, but also notably in the residential segment, which had nearly died down, you know, 2 years ago. So there is a very smart recovery in residential assets as well as in office. There are a few other sectors as well, you know, which are doing well, not as big. So for example, you know, there is interest in warehousing, data centers, and few other sunrise sectors. But that sums it up actually.
So if you could give us a sense then, you know, what are the differences in the spreads between the rental yields that you get on commercial versus residential versus warehouses, etc. What explains this, you know, reinvigorated interest in the residential asset, and what one can expect in the second half of this year?
So look, office has gotten established, you know, so it's been doing well. It's, you know, it used to be about 9.5. It's still doing about 7.5, 8.5 or so, which is, you know, practically in an accepted range. Residential traditionally has been low.
Yes.
But, you know, there are, you know, newer things like structured debt, which is taking place, which is also creating interest. I don't know if there was a very major transaction by Mapletree in Bangalore, which became a news. Yet another, you know, event. So it is those things which are creating interest in residential, not purely the annual yield, which would still be very low if you look at other segments. Warehousing, on the other hand, is delivering some very good, you know, yields at the moment. There are not many examples, but the interest is high because it's a new segment. It's something which comes at a much lower cost and is a growing segment. So that again is expected to give you about 7.5 or so kind of a return. Ballpark, you know, these are the numbers and these are the reasons where, you know, the interest is getting evoked from.
That's very interesting. New segments that investors are looking at as well. Let's get Gaurav Karnik as well in the discussion. Gaurav, thank you so much for joining us. Well, can you explain what's happening here? And also in terms of numbers, the May 2024 number, according to the report, is $2.5 billion. Where is it going, and is it the highest that we are seeing in the real estate space? And is it investments only by P plus VCs, or there are more parties that are investing here?
Yeah, so I think like Arvind already mentioned, the real estate sector is really seeing a real revival of the last 3-4 years. If I look at residential, you know, from the time of COVID, we have seen a real boom in the residential market because people really want to buy houses and have at least one home with them. And people who have houses, let's say 1 bedroom or 2 bedroom, they're going to 3 and 4. And so that is really boom. There's really an end user segment which is taking investments in the residential space. And if you see Gurgaon or you see Mumbai or Bangalore, the prices are really going up because there is a significant demand. And if you see any of the launches by the developers, they are being picked up in 2-3 days. So I think some of the demand on the residential side is clearly on the end use. People are looking to buy houses and to get that into their portfolio. The other part which we are seeing is on the commercial office space is that, unlike the rest of the world, a lot of the people here in India are gone back to work. If you look at America or Europe, they are still working on a very hybrid model where, people go to work twice or thrice a week. And whereas in India, there's a lot more people coming to work in the week. So there is a lot more confidence in the commercial assets. So, the Wave Rock asset in Hyderabad, which was bought by GIC and Xander, which is the second time it's been purchased. So that shows confidence in the commercial market. There is also the purchase by Brookfield of Bharti's interest in their joint venture and basically making it 100% JV. And I think one of the points which is driving commercial or even warehousing, and I'll come to warehousing later, is that there is an exit in the form of the REIT, which is there. So that is giving a lot of confidence to foreign investors or investors to put money into such income yielding assets, because now clearly there is a way for them to get an exit other than just pushing it on to the next private equity player. And if I look at warehousing, the largest transaction was in the Reliance the warehousing assets, where RDI and KKR have put in money. So if I look at the type of people who are investing in India, which is not just private equity, is also the sovereign wealth funds and pension funds. And along with that, there's a large domestic pool of capital, which if you see the AIF space, there is a lot of domestic money which is being raised in the AIF space, and that is being deployed in the real estate market.
You preempted my question on the exit with the REIT one. That was rather insightful, Gaurav. I just wanted your thoughts on going back to the returns bit. I was asking him about the yield, the rental yield differences between the various kinds of assets, but that's not the only one. There is capital gains as well. And you said that house prices have increased. So on a total returns basis, what is the typical sort of number that one can look at across all forms of real estate? And, is there any exit apart from looking for another PE? One tries to figure, because liquidity risk has often been associated with real estate investing.
Right. So if I look at, the various yields is different. So if you look at residential, the residential yield on rental is very low. Whereas if you look at commercial, it's much higher. So if you look at residential, it'll be after post-tax is something, 2-3% or sub 3%. Whereas if you look at commercial, it'll be in excess of 10%. If you look at the way you're exiting, it is obviously for people who are developers, they have an option if on the commercial, on the warehousing side, to either do a REIT or InvIT. And that can be, a REIT is a public issue, which brings a lot of investors. The InvIT can be privately placed and then publicly listed. So the InvIT and REIT definitely gives you a clear exit. And the other type of investors, I guess, is the HNIs who have put money into the domestic AIFs, and that clearly gives another pool of capital which is there to purchase certain assets. So there are, a bunch of set of buyers, whether it's the InvITs, REITs, or it is the, private equity and sovereign wealth funds who are there along with the pension funds from a foreign perspective who are, investing in this market. And even the large private equity players, their LPs are typically the sovereigns and pensions as well.
Okay. Arvind, now what next? You said 2019 is when the numbers peaked. We have seen $6 billion as well in terms of PE investments. Do you think it'll take a lot of time before we get back to that number? What is the sustainable rate that the industry is expecting now?
Yeah, so not a lot of time. But, in this year, we've already seen a significant jump, first half to first half on an annual basis. End of this year should again give us a substantial jump over the last year. So I'm looking at something like 5 or 5+ billion in this year. So we're not yet getting up to 6 or 6.5. But if things do not change in an unprecedented manner next year is when we should be able to get back to that peak, is my guess. But there are so many other conditions that you need to fulfill in order to for these things to happen. So if things do not change as they are today, I think next year is when we should be able to get back to that peak. As of now, it looks like a good environment. We are climbing in a steady manner, but not yet hitting that peak.
All right, let's let Gaurav have the final word here as well. Gaurav, what are you hearing? The second half of this year, what's your guess?
I guess it should pick up in the second half and early next year. I think that's clearly the way the markets are looking. I think one of the drivers or, one of the things which are impacting investments in India or in the emerging markets is the interest rates overseas. So if there is a, some downward trend in the interest rates, say in the US or in Europe, that will clearly free up more capital for investments. And so hopefully by the end of the year, there would be less inflation in the US, or there would be better numbers, which would, allow them to reduce the interest rates. And that would clearly be an indicator or way to getting money back into the emerging markets, including India.
Okay, all right. Gentlemen, it was a pleasure speaking with the two of you. Thank you so much for joining us today and throwing the spotlight on what's happening with PE investments in the realty space. It's been doing really well in stock markets in terms of stock market investments, and a lot of interest coming in from private equity and venture capital as well. Time for a break now. Jay Thakkar of ICICI Securities will join in with some trading strategies on the other side. Stay tuned. Welcome back. You're still tuned into Halftime Report. We've been talking about a lot of broader market movers. ITD Cementation, that stock is under pressure today. The promoter, Italian Thai Development Public Company, is exploring potential divestment of its stake. Nigel is here with the details and analysis as well. Nigel, what's happening here?
Well, that's right. Late last evening, we got news that the promoter entity, as you mentioned, Italian Thai Development, they're exploring a potential sale in this Indian listed company. To run you through a couple of details, the promoter entity has around 46% stake in the company, which is valued at around 4,500, 4,600 crores. But why is the stock down? There seems to be a big pre-run in the stock. So to call it, even after today's 10% drop, the stock is still up close to 80% in this year. That's the stock price today. You pull up a year-to-date chart, you'll see that it's still up close to 80%. So that's one factor. The other factor is the promoter entity. It seems they're under some debt pressure. I was looking at a couple of articles. They've been making losses and they have a mountain of debt. So the promoter's bargaining power may not be as much. And point number 3, the management had given us a very, very good guidance. Big growth on the top line, margins expansion as well. And if you look at an Equirus note, well, they are factoring in that the PAT can go up from around 270 crores to around 470 crores odd. So which means at 9,000 crores market cap, it's trading at close to 20 times. So not particularly cheap. Maybe that's the reason the stock is under pressure.
Right, take that point, Nigel. Thank you so much for explaining why ITD Cementation is down 10%. But let's look at the market. This morning, we hit a fresh record high on the Nifty. That's been routine for us. And the biggest reason for that is the smart shifting on bet-on that we have between the Nifty IT index and the Nifty bank. So if you pull up both the Nifty IT index and the Nifty bank side by side, you would see that yesterday it was the banks which were doing extremely well. Today they've taken a bit of a backseat. The Nifty bank is down about 114 points. We have the IT index, which is higher in today's trading session, led higher, of course, by both Infosys and TCS. It's a Thursday today, which means it is Nifty bank weekly options expiry. Ahead of that, we have the HDFC bank stock, which is under a wee bit of pressure today after a big move that we saw yesterday already. We pointed out that the 1800 call on the HDFC bank stock has been extremely active, so 1800 would be a bit of a resistance. Nifty bank weekly options expiry, which means that the active options where we are right now is the most active, 24,350 call for a premium of close to 25 rupees, telling you there would be congestion around 24,375 to 24,400. Both those calls come up for you on the screen, 24,350 call, and we have the 24,400 call. At the lower level though, support comes in a lot earlier than what we were anticipating. So we have the 22,300 put, which is all but premium eroded. So 24,300 would be an extremely crucial support to watch out for. A lot of long positions added on Lupin, some short positions added in a couple of names as well. But today I'll be watching out for the ban list very, very closely, and that's because there are 3 stocks which are likely to come into FNO ban. So you have, you have a bunch of stocks like Bandhan Bank, AB Fashion and Retail, Piramal Enterprises, all of these stocks where the market-wide position limit has crossed 95%, and as a result of which these may enter FNO ban.
AB Fashion, a big move since the demerger announcement, almost 50% there. But thank you so much for making sense of the FNO setup, Mangalam. But let's move on. Jay Thakkar of ICICI Securities is joining us now. Jay, what are the important levels on the Nifty to watch out for and in your individual technical bets?
Oh, very good afternoon to you, Sonal and Mangalam. Well, see, as far as Nifty is concerned, today we have this weekly expiry. So I think that 24,500 is definitely going to be a clear resistance. So I don't think that we would have a weekly settlement beyond the levels of 24,500. In fact, 400 to 500 is a very crucial resistance range. However, Sonal, I think that 24,300 is a very crucial support as well. So within this 100-150 points range is where Nifty is likely to expire today. And as far as the individual stock names are concerned, I mean, I agree with what Mangalam was trying to highlight, the negative correlation between Bank Nifty and Nifty. So today is Nifty IT. So Nifty IT is positive today. I have a bullish or buy recommendation on Emphasis, which is trading around the levels of 2,600 right now. One can place the stop loss below 2,540, target 2,700 to 2,750 in the short term. And other two buy recommendations are from the PSU segment. One is on BHEL, which is trading around the levels of 314. One can place the stop loss at 308, target 325 to 335 positionally, and sale, that's a final recommendation. Sale is trading around the levels of 152.75, 153. Sonal, one can buy this, placing a stop loss at 149 in the short term, targeting 157.5 to 160.
All right. Thank you, Jay, for giving us your calls. We'll take a short break. On the other side, we'll connect with the management of Inox Wind as the company aims to achieve net debt-free status with the infusion of 900 crore rupees.
Welcome back. The stock on our radar is Inox Wind. It's buzzing in trade. Company eyes to be net debt free with infusion of 900 crore rupees by promoter. Company expects substantial savings in interest expenses going ahead, aiding profitability further. To discuss this and more, we have Devansh Jain, ED, Inox GFL Group, joining us now. Devansh, good afternoon. Thank you so much for joining us. Well, you'll be infusing around 900 crore rupees. The debt as on March stands at 650 crore rupees. So what will the remaining fund be used for, and what kind of interest savings will you see, and what will flow to the bottom line because of that saving?
Hi, good afternoon. Pleasure to be back. Yes, this is a very important milestone for us. We've been working hard on this over the last 2 years. Happy to see that we finally become net debt free. I think in terms of interest cost savings for FY24, our interest costs were about 250 crores. So for this financial year, barring Q1, where obviously we have certain interest costs, we should have overall saving of at least 175 to 200 crores, which will directly go to our bottom line. In terms of term debt, all of these, of course, there are certain timelines within which these need to be paid. We can't prepay some of them, so we are net debt free. But all term debt will be repaid in due course of time. And now what we require is primarily non-fund based facilities, LCs and BGs for our working capital requirements. Even in these, I think we should see a significant reduction in costs and charges, given that our credit ratings have been continuously being upgraded over the past few quarters. And obviously, we believe going forward as well, given all the levers are in place, which is not just a strong balance sheet now. We have a very large order book and very, very strong order inflow visibility. The technological upgrades moving to a 3.3 megawatt turbine, our 4X platform, and actually the very large development pipeline and common infrastructure, which we own, should lead to us scaling up very, very rapid.
Right. That's interesting because just a few days ago, there was a brokerage that initiated coverage on your stock, and they factored in close to, 600 crores in terms of net profits next year. And I'm not sure whether they are factoring in any sort of debt repayment out here. So if that were to happen, then in due course of business itself, your net profit would increase over and above the expectations of the analysts by about 150 crores that you've spoken about. Let's talk about your capacity and your orders. You have about 2.7 gigawatts of orders. What's the kind of inflow that you expect, or what's the kind of signings that you expect over the course of this year? And how do you ramp up your capacity? What's your production target for this year and the next couple of years?
Look, so we have a very strong order book of about 2.7 gigawatts already, which is spread across PSUs, IPPs, CNI players, and we see a very, very strong pipeline of orders, which are continuously coming through. I mean, we are participating in many PSU tenders. We are currently negotiating with multiple new customers as well as a couple of existing customers for increasing the already orders placed on us. It's hard to give out specifics at this point in time, but I think given the targets, we publicly guided for 800 megawatts this year, 1,200 megawatts for the next financial year. And typically in the wind industry, your firm order book is about 2 years. So if you look at that, we're already at about 2.7 gigawatts. We're covered for about 2.5 years. Without getting into too many specifics, all I can say is we will look to further upscale our next year's guidance, given the strong order inflows which are expected over the next couple of months.
Okay.
In terms of our manufacturing capacity, it's at about, all in all, with our 3.3 megawatt platform, we can produce about 2.5 gigawatts per annum across the nacelles, blades, and towers. So effectively, I think we have a very large manufacturing capacity at this point in time. We may debottleneck, a couple of our blade or tower capacities, looking at some of the demand for equipment supply which may be coming in the south, but no real capex which we would like to guide, given that there are multiple sheds available for rent and lease at fairly competitive prices.
Okay. Devansh, if you can quickly tell us, so what will the remaining fund be used for? I believe 650 is the debt. You'll still have some funds left to be used for some other capacity addition or other plans. Inox Green also, there is a preferential issue that you have planned of around 1,000 crore rupees. Will you look at inorganic growth? What are the plans here?
Look, I mean, at Inox Wind, clearly we'll be carrying, now that we've become net debt-free or say net cash, we will be carrying some amount of cash at all points in time. From a management perspective, we would like to carry at least 2 months of mandatory payments as net cash at all points in time, post which I'm sure the board in its own wisdom will put out a dividend policy, given we have that in many of our listed companies. In terms of Inox Green, yes, that is a net cash entity, and there has been a fairly large fundraise which has been announced over there. While we've mentioned the primary purpose of raising those funds in the objects, but we've really done that to create a war chest, if I may be blunt and short. We've really done that to create a war chest since we're looking at multiple acquisitions. We've had a very strong set of investors who've participated in the preferential issue, besides the promoters themselves pumping in a substantial amount, given the fairly strong order book that the fairly strong growth outlook we see for that company as well. And yes, we are working on a couple of acquisition targets at this point in time. These are fairly large O&M plays. Obviously, there's no guarantee that these will go through, but if these were to go through, we would substantially add to our existing fleet and profitability.
All right, we take that point. We'll leave it at that, Devansh, this time around, but we'll leave it with a promise for you to join us back after your first quarter numbers so that we can talk in detail about growth plans going forward as well, holding his cards close to the chest, but reiterating their guidance that they've made about production as well as sales, and saying that there could be perhaps a bit of an upside to the guidance that they've given itself. Before we slip into a short break, let's get you some visuals coming in from our boys in blue, Team India actually. The bus has left the 7 Lok Kalyan Marg, that is the Prime Minister's residence. So that's where they met after landing in Delhi shortly. Take a short break, come back, focus on the markets and more stock-specific action. Welcome back. Bank of America's International President Bernard Mensah, in an exclusive conversation with CNBC-TV18's Nisha Poddar, says the bank sees a dramatic change in India's economic growth trajectory, especially with policy continuity post-elections. Also points out that the US Fed's stance on rate cuts is critical but not time-sensitive. Listen in.
What was on my mind and a lot of what people outside are looking to India with is, since the elections, have things changed, and is there a different direction? The results were a little bit of a surprise to casual watchers. Maybe for those of you on the ground, it was completely expected, although elections are you never know exactly how they'll go. And the sense is that there's actually quite a bit of continuity. I think there's a real consensus as to the economic path that India is on and the policies broadly that they're on. So it doesn't feel, definitely from the last 2-3 days that I've been here, that there's going to be a dramatic change.
a dramatic change, all right, and you still have to see how this really pans out. But policy continuity largely is one thing that global investors and global companies like yourself really like about India. That's what I'm picking up.
And can I say very quickly, sorry to interrupt,
No,
it's
sure.
just, that not just the policy continuity, but I think we have all been really impressed with India's democracy as well. It's quite a thing of wonder, the scale of it, the size of it, the timing of it. And there's a sense that through that process it reinforced the institutions that you have. It was able to deliver a message to all who want to watch and see it that was reasonably clear. And I think that is also a positive for market participants.
Bernie, you are a banker, and the biggest question which is going to impact the world market and businesses in India also to a large extent, and liquidity flow, is going to be also the US Fed Reserve really cutting the interest rates. Now, in the most recent commentary coming in from the Fed, they've said that they need more data to see that inflation is tackled. While the market, after tapering their expectations, has come to a September kind of a cut and maybe one cut this year. As a banker, what do you think? What is the thinking at Bank of America, and what is the right estimate when it comes to this interest rate cut?
If I knew what the right estimate was, I'd be running a very
what
successful
is the opinion? All right, what is the opinion which is building now after these recent comments and the recent data?
Yeah, no, I know exactly what you mean. And look, who knows? There was a large disconnect at the start of the year between what the market's expectations was and what the central bankers were saying. I had the privilege of joining some of them in Switzerland in March at the Basel Committee, and there was a sense of in a lot of academic papers and a lot of discussions as to why there was that disconnect.
Yes.
And as you rightly point out, there's been less of that. So our research team have a view, and I think at the moment they're thinking perhaps one cut before the end of the year, and you can see what a lot of others are thinking. And of course, we can see what the markets are pricing in. My sense has always been that that the looking at the underlying strength of the U.S. economy and the health of the U.S. consumer, we have 60, 70 million customers in the U.S. We have a sense of what they're spending on, what their bank balances are like, how they're feeling from our interactions with them, and how well we service them. I always had a sense that the U.S. economy was stronger than perhaps would be shown. And then we saw, again, through places like India and Korea and Japan and others, we saw a lot of foreign direct investment going into the U.S. as well, with things like the Inflation Reduction Act and some of the large policies like that going on in the U.S. and elsewhere. So it always seemed to me that it would be a little bit tougher to come down as aggressively as the markets were pricing in. But if I were the Fed chairman, I would also look for the data to see, where we are. And it's not a bad situation to be in if the economy is doing as it is, and there's a sense of, okay, is it 1 or 2 this year or a little bit next year? I don't think it makes a huge amount of difference, and I think they're doing a good job in.
Welcome back. We're joined now by Sumit Gupta. He's CEO CoinDCX. Sumit, hi, welcome to the show. And it's after a very long time that we're talking about Web3 or crypto for that matter. But we do understand that there is development. And first of all, congratulations on your recent acquisition with BitOasis. Tell us what it means for you and your overall portfolio and for the Indian participants also.
CoinDCX started in the year 2018 and now is the most reputed and the safest exchange in India. We are the largest player in the Indian market, and global expansion has always been a part of our growth strategy. Of course, MENA becomes one very exciting market, one of the fastest growing market. And we've been talking to BitOasis from a couple of years now. In fact, we have made a strategic investment in BitOasis in 2023. And since then, we have been, looking at the progress, the growth the company has made. The company has also turned profitable, very similar thinking, compliance first thinking, building in the right way. Regulations are there in the market. So it becomes a natural choice for us to acquire BitOasis to expand into our, global plans and We announced this acquisition very recently, and I'm very proud to share that this is one of its kind deal where an Indian young startup grew on to become a largest company in a sector and then acquired a company in MENA region. I think it's a great moment for CoinD6 as well as for the Indian Web3 ecosystem.
Let's take a step back then and talk about on how many members are there on the exchange in CoinD6 in India. How many crypto assets are you supporting on the platform? What is the kind of volumes also that you're looking at?
All of these numbers are also out there in the open. We are very transparent as an organization. Just to share some more stats, so we have roughly 15 million customers, which is roughly 1.5 crore verified users. We have processed a cumulative trading volume of around $80 billion quarterly, between $7 to $8 billion. We have assets under custody of roughly $500 million. And largest exchange in India, last round that we've raised, we were valued at around $2.15 billion. India is a huge market, very bullish on the Web3 opportunity in India, and we continue to go deeper there, continue to go deeper into crypto and Web3. And BitOasis is again a significant milestone in the journey of CoinD6.
It sure is. So when it comes to BitOasis, it does support 60 crypto assets, but there are various fiat currencies that you now open up to. I mean, in India, we do it in Indian rupees, but you have access now to dirham and SAR and US dollar for that instance.
Yeah, a lot of fiat currencies are supported in BitOasis, and the great thing is it's all regulated, by VARA, and there's recently one more license received in Bahrain. So whatever fiat currencies that the regulations allow us, the BitOasis team will continue to open those fiat options, which will of course contribute to adoption of crypto asset, not just investing, but also usage of crypto, overall. So I think all of these are very progressive science, because some of the countries are very progressive and are ahead of its time. So we also at CoinD6 will have a lot to learn from how regulations are, coming and how regulators are thinking about it, which can also be applied to India. And I believe in the long term, globally regulations are going to be pretty much similar.
So, the final question to you, and this is the time that we're asking everybody about their pre-budget recommendations. What is this sector now anticipating or looking forward to?
See, at CoinD6, we are building for the long term, and for us, it's been 6 years. It still feels like day one, and we'll continue to build for the category for many more years to come. Of course, the industry has taken a lot of steps forward in terms of increasing clarity. There is taxation, but yeah, in terms of recommendations, I believe that the taxation that has been imposed on the industry can be further relaxed down. That is a representation we have made very recently, and hopefully the government will consider the request of the industry. We have done it both from CoinD6 as well as from the association, where all members are there. So the tax needs to be lowered down at par with what other countries have. Otherwise, my worry is that the innovation will shift offshore, the talent will shift offshore. And the second recommendation is that the industry has shown a lot of progress and resilience over many years. And I see a lot of developed nations, lot of big economies working towards regulating the sector. I really wish that India also comes up with a clear regulatory framework. I think that is good for industry, that is good for the government, and that is also good for the customers who are participating in the sector. It is also, I think it will also position India as a global leader, or at least a great contributor to the overall Web3 sector, and it is also going to have a direct impact on the country's GDP, employment opportunities. So net making the tax framework a little more lenient and in line with what other asset classes have, I think that is very important to preserve the talent that we already have in the country. And number two, making sure that we come up with a progressive regulatory framework so that the industry continues to prosper, grow, and keeping customer protection at the core and center of everything.
All right, we hear that. Sumit, thank you so much for joining us here at CNBC TV18. But with that, it's completely out of time on Halftime Report. Business Lunch will take all the action ahead.